morning and welcome back to Money Markets from True Potential. Paul Durrans, Investment Director. Today we start by looking back at last week. Starting off the year with very much the themes of 2022 remaining in focus, those being the path of inflation, the strength and health of labour markets and the reaction function in terms of policy from US central banks. We got various economic data released last week and really helping us to think about the picture of inflation and labour markets. On Friday, we had what is known as the US non-farm payrolls. This looks at the labour market, at how many jobs are added over the course of the month. Last month, we saw in the US 233,000 jobs were added to the US economy, a very strong number, and that continues to give evidence that the US economy and the US labour market remains very strong. When we look at the reports and where those jobs are being added, it continues to be led with the service sector, with hospitality, leisure, education and healthcare. It's very strong. We saw the unemployment rate fall to cycle lows of 3.5% from 3.7% over the month. So very strong. When we look at revisions for the two previous months, we actually saw revisions lower, but on the whole, still a strong US labour market. We also saw wage data. Now, wage growth has been very strong over the course of last year, and that's due to the strength of the US labour market. More workers employed, a shortage of workers out there, and the demand for or job openings remaining at historic highs means that companies have to pay their staff more in wages to help secure them. When we look at the data on Friday showed that wage growth had actually missed analysts' expectations. 5% wage growth analysts was expecting for the year actually came in at 4.6%. So wage growth was not as strong as expected. When we look at the month-on-month figure as well, again, for December, it came in at 0.3%, whereas analysts were expecting 0.4%, and they actually saw the previous month to that, the figure being revised down from 0.6% to 0.4%. So wage growth is not as strong as what analysts and markets expected. Why is this important? Well, the US Central Bank, the Federal Reserve, has been trying to get inflation back towards a more sustainable level and their target of 2%. Their problem is that given the strength of wage growth in the labour markets last year, they've had to put up interest rates aggressively and tighten financial conditions to try and get wage growth down and bring inflation down. With wage growth not as strong on Friday, given the reports, that was actually a real positive for markets because interest rate expectations going forward actually can come down given this data series. So what we saw on Friday is the US stock markets rally strongly, up 2.3%. For the week, up 1.5%, so good start to 2023. That strength in the US, we also saw in other developed markets such as the UK and Europe. We saw strength and positive returns from US government bonds, from gold as well, and we saw the US dollar weaken markedly against the pound. So looking to the week ahead, what we'll be watching out for is the US inflation reports. That what we're expecting is for inflation to fall from 7.1% down to 6.5%, so continuing that downward trend, which is important. If we see inflation come below that 6.5%, we'd expect markets to perform well, equities and bonds, as interest rate expectations fall. We'll also be watching out for corporate earnings. Corporates, particularly in the US this week, will be reporting their earnings for Q4 last year. It's important not only to look at whether corporations are beating analyst expectations or missing expectations in terms of their sales and earnings numbers, but we'll also be looking at what their management are talking about, what they're talking about in terms of consumer demand, in terms of investment, in terms of the staff that they employ. So we'll keep you up to date this week, and thank you very much for listening, and we'll see you tomorrow.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.